Still unsure exactly how to mark up that smart money structure and how to apply it to lower time frames? Stay with me in this video, and later on you'll have the exact process how to mark it up on a 1 minute time frame. So look, we're currently on a daily time frame. Now, understanding this smart money structure, before we go over to the 1 minute chart and we go through live price, let me just demonstrate exactly how you should be marking it up. So if we have a bullish move, let's say in the market, let's just change this to a bullish candle. Let's just make it blue full. Okay, so we have a bullish move in the market. You're going to look for the continuation of that flow to continue bullish, right? So you've started to see the range forming. We're starting to continue to move to the upside. Then if you're starting to understand structure but still feel stuck when it comes to placing real trades, this is where it all clicks. You'll finally fix the missing half of your strategy, the part that turns smart money structure into trades you can actually take with confidence. No more second guessing, no more late entries. Once you see this, your charts will never look the same again. Click the link in the description to get started. What we're looking for is to create a valid high in the market is a candlestick to close below the previous candle's low. Now, not the open price, but a wick, okay, the low of that candle. So if we have this as a red candle, so we've closed down, this now creates what we're looking for is a valid high in the market. Now you'll see this, I'll go through quickly on this area of price on a daily before we drop down to the 1 minute, and you can see exactly how the 1 minute will actually work with this smart money structure. So once you identify this and you've got this closed down, you're looking for the same pattern. So if I just copy this, okay, get this candle, and I'll copy this and drag this across, you're looking for the same pattern. So you're looking for price to have closed down to create a close like this. So as long as you see a candle closing down below the previous candle's low, like you see here, that creates our low in the market. So now we have a trading range from this high. Let me just mark this out. From this low to this high becomes your current trading range, and you're looking for price potentially to pull back to continue up with the current move. That's understanding your different types of structure. Okay, we can apply into this supply and demand. The next step on the workshop, that's how we create our trades with supply and demand. This is understanding the structure. So that is the way we look at marking out our valid high and low. That's with a bullish trend. And a bearish trend, it's slightly different, and we'll look at that as we go through the 1 minute price chart. If we now just remove all this again, and we'll look at this current price on a daily below, and we'll just quickly go through and I'll mark it up for you. So if we look at this last push here, we can mark off this high. We see this is a breaker structure. And if you're not sure about the valid breaker structure, there'll be a video coming up at the end of this video. We'll go through understanding exactly what the breaker structure is and what it entails. So do continue watching and watch that after this video. But this is a valid breaker structure. For me, we break to the upside. Once we have this break structure, we can look back to find the last time we closed down. This is the last candle that closed below that candle. And what I'll do, I'll highlight this with an arrow. So this is the candle. This candle closes down below it. That creates our valid low right there. Now, we do the same process in the bullish market. We're looking for the next close down. Well, that's the candle that closes down right there below the previous candle's low. That creates from the highest point my valid high. We just sweep that high, we pull back into an area here of imbalance, and then we break out again to the upside. That's simple. Now, once we see that breakout, once again, right here, we look back. The last time we closed down is this candle here, closes below this candle's low right here in the market. What does that create? It creates a new valid low. Here we'd mark. And again, what we can look for is the close down for valid high. Well, as this candle here does close below this candle's low, we can mark it off. And that means this becomes a valid high we mark for the next break to the upside. So that's our current trading range at that point, and this was our previous trading range. So we just mark these off as a breaker structure so you can identify where we have that break. That's very simple process. And all we do, again, we wait for the close down. So we move up. There is the next close down right there. That candle closes below that candle's low, creates a new breaker structure to the upside. And again, from this point, when we see this breakout, we look back. This was the last time we saw the candle closing down. It's the lowest point in the market there, becomes my current trading range low. So we continue up. We have another breakout. Now we look back For a low, this is the last time we saw the close down. So this becomes my valid low. And now hopefully you can see we create a break to downside. Once we saw this candle closing down there. Now the reason I'm going through on this chart to show you how we read it, because when we go to the 1 minute chart, as price moves quite quickly, you're going to see me marking up the levels quickly. So when we see price coming down here, eventually we bounce up and we break through that candle. As soon as we see this breaking through, we look back this time for the last candle that closes up. So as you can see, this candle just closes above the high of that previous candle, and that becomes your new current high in the market. And I just look for the same sequence. We look for the close up again to create a new low. So your current trading range has now shifted bearish. Now hopefully you can see how we apply this. It's a very simple procedure. If you're still unsure, just rewind this part of the video and watch it again. Do let me know below in the comments if this is making sense, this smart money structure. And in fact, share your wins. If this is helping you find more profitable trades, I want to know this. I want you to share that down below in these comments. So that is on a daily time frame. That's how we look at the smart money structure. Now let's apply this to those lower time frames and how it's going to help you to identify lower time frame entries as well. If we now pop down to the 1 minute time frame, and what we're going to do, we're going to go with the current price. Now it's going to take time for price to move. So what we're going to do instead of going with live price was what I had intended to do is I'm going to just move this back, grab a replay mode and just mark it off. And you'll see that this is just as good as live price. I don't know where price is going from this point. I'm just going from the live price. And what I'm going to do is start from this point here on the chart. So everything to left from that point, I'm not concerned about. I'm going to look for where I start to see that pullback. Okay, so price from this point, this is my first candle that closes down for me. So I can mark this off as an arrow and I can mark this off as a current range high. Now, when price moves down, I'm looking for what? I'm looking for that close back up. There is the close back above the previous candle's low. That creates this low as a valid low in the market. So now we have straight away our trading range from this high to this low. What does this create? It creates a break of structure. And as soon as we see that break of structure, we look back for the last close up because we're in a bearish trend this time where you saw previously in a bullish trend, and we can just mark this off. In fact, let me leave the levels on so you can see how price moves. This becomes our new trading range high. We move down and I'll use an arrow because it's easy to understand. This candle here closes above the previous candle's high, and that creates a new low, valid low. Then we have a new break of structure here to downside. Now, as soon as we look for the next candle again to close above, which it's either this candle or at least this candle, that creates our new valid low. So there's our valid low. So now you can identify straight away, there was a previous trading range, new trading range. And when we saw this break to downside, we look back, where was our previous high? Here. So that's our new trading range. Now look what price did. Now, this isn't a coincidence. This happens because we understand smart money and we've come back up to run this previous high we've got marked. We swept the high, pulled back, made a higher low, and now the market pushes up to break structure. That's how we start understanding this. And as soon as we have that break of structure, you can identify we have a close straight down. This is a 1 minute time frame, not a daily. So you can see this applies to any time frame. So you can apply this smart money structure across all time frames. Price closes down. This is easy once you understand it. This creates a new high. And again, where's our last close down? This candle here is our last close to downside. That means this creates my current low. So my new trading range went from this move down to this move up. Now we had a straight break up. Once we broke out again, this became my new low. Now you can see where the ranges are getting smaller as soon as we have this candle closing down, this one. Let me grab this previous arrow. That creates a valid high. So there's a high. Now, even though we can see this gets swept overhead to the right, what we actually create, or actually we don't create, is the next pullback. So once we identify this as a break to downside, let me just change the break to a dashed line so you can see where the break of structure occurs. Again, let's just change these so it keeps it all in line for you. And you can identify where the movement is in the market. So this then became a break to the upside. So as we go through, you can start to see where price is moving. Now, in fact, there's not much point really changing it, is there really? But this is what happened. When we see price pulling back here, and this is key to understand, let me just zoom into those candles, because you need to read the candles. There's no point we close above. The first time we actually close back above is on this candle right here. So what that means is this is our break of structure point, but our low, our valid low, is here in the market. Now that's our valid low. The reason that's our valid low is because it's the lowest point from after we saw the close up. So our trading range, in fact, is, okay, from this high to this low. And that's why we see the sweep occur here again. Just like we saw over here, that sweep pulls back for a higher low to bring in some buyers again. They want to come into these areas of imbalances, okay, and then they continue the market up. So where does your valid break of structure come? Over here. Very simple, even on these lower time frames. Okay, we can even do this on probably seconds as well. Now, once we see this breakout, we look back. This is the last time we closed down. So that's our valid low in the market. Again, our close down is on this candle. So it becomes our valid high right here. We pull back into our imbalance. We push up, we break structure again. So once we see that break of structure, last time we closed down is this candle. Okay, from the breakout point, our lowest point is here. That becomes our low. Do we close down here or here? No, that's our first time we close down. That means this high is our highest point. It becomes our new valid high. So you can see that we're bullish here with a market. Then we shift bearish right here through here to downside. So there's ways to understand as well why the market is going to pull back using these imbalanced candles. And you can learn much more of the imbalance inside the 90-day system. Now, if you want to learn more of that, it's coming towards the end of the video. So when we see this breaking to downside, we look for what straight away. We grab the previous arrow over here. We see the breakout. We look back to the previous close up. Well, this candle here closes up. Let's just go in closer and we'll double check. This one did not quite close above. That's our last time we closed above. Well, in fact, this candle here closed above this candle. That means we mark off the highest point, which is here, as our valid high. So our trading range is now from this high to the next point we see the close up. Again, let's just grab this arrow. We close up right there on that candle. That becomes your low. So our trading range is simply within this move. And we're looking for price to pull back. Now we have an area of supply here. And again, like I said, you can learn this. Next step is that workshop to bring structure with supply and demand through entries. And you can see price actually comes up here. We just sweep it. So we're on a sweep. Let's grab a liquidity here on the 5 minute. So we just sweep that high into this area of supply within this leftover area on this wick or this candle, and then we push down for the low. That's understanding supply and demand here, what's actually going. Now this is a bearish candle. This is a jump up and a close down. So in theory, you could say price actually just wicks up here, and then we actually wick above that candle to push lower. That's understanding candles that this is a gap up and then a drop back down. Now in theory, there wouldn't be a gap here. There would just be one candle closing down with a long upper wick. So there's how you can see price running to that low. Once we see that breakout, where is your new potential high? Well, it's going to be up here. And let me just mark that out again. So there's our new high. And when we look for the next close up, there's our candle closes up. If you're not sure, let me just show you again. That's the first candle that closes up a previous candle's high, and we look for the lowest point. We mark it off our new trading range. Again, price pulls back. Okay, again, this candle would just basically be a wick up and a bearish close candle. You wouldn't see these gaps normally like this. And price would come into an area of supply. We run down expecting it to take up that weak low. It doesn't. Then price reverses within this trading range, and eventually right there on that candle, you can see we break bullish. Now, when you look back from that breakout point, again, this is then the first candle. You just mark it off above it. The candle closes down. That means that becomes your valid low in the market. And this becomes, after this candle closing down, your valid high. So look how your trading range went from a large trading range to a very small trading range, and very quickly we shift back bearish. So it's more of a sweep above the high, shift back bearish, and then we have that big close back up, becomes our new valid low. Okay, where does price pull back up to? Into our area of supply and into this area of this balanced candle. So when we mark this off, you'll see that price holds that imbalanced candle, sweep above, and we run through and break structure once again. Now, as we see this break of structure, now I'm going a bit quicker now so you can start seeing how easy this can be done. As soon as we see this candle closing above, becomes my valid low, we look back for a valid high. This is going to be the valid high. Okay, we don't need to worry about this level. There's our valid high. We break structure straight away. We pull back. Okay, we sweep above these highs here. Basically, that's what the market's doing, sweeping those highs. Then we run down. Now, at this point, we don't have a valid low here to mark. Why? Because this candle didn't close above. But this candle did close above. You can see how we just closed above the previous candle's high. That then does create a new low. Okay, let me just go in closer so you can see what actually happened. Okay, it's always good to zoom into those candles so you can identify. We ran up, we swept this candle's high into this imbalanced candle, dropped back down, then we closed up with this candle, creating this as a valid low because we always mark the lowest point in a bearish trend. Then eventually we break through with this candle. Now we look back, this is the last time we closed up. That means this becomes a valid range high. When we close up with this bullish candle here, that blue marked candle, this becomes a valid low. So this is our valid high, valid low. We pull back up into this area of supply and imbalance and run, and we take the low. It's a valid reversal. Now again, this is only sweeping a low, not a break of structure. And then we run back up towards this high where we're currently still holding inside this wick area of supply. And we're running this high. Potentially we could shift bullish. So let's see what happens from this point. Now we've run through price, look back, you can see how we've quickly marked all this up, going through from that level we marked. Now we can just go forward price. I'll show you how easy this can be done, just running with the flow of price. So I'm looking for price to do what? Well, looking for it to break above that high to shift structure. We'll continue to run this low. And we'll just go forward quickly with a few candles first. Actually, let's now fast forward. So we've just run through the low with the wick again. Are we going to break that structure? And we do. So you can see that this wick area supply set about held price again, and we swept this high and we ran through to downside. So once we see that closed candle, we look back. Where's the last time we see the close up? Right here. So this becomes my current new range high. And then we wait for what? We wait for the closed candle back up again. Big wick to downside. And there's your first candle that closes above the previous candle's high. So now we can mark this out as a valid low. So there's our new trading range. Let's just fast forward this a bit. And we break structure once again. Very quickly, straight down. So once we see the breakout, we look back. This candle closed above this candle's high. That's our new range high. This becomes a break of structure. And we don't yet have a valid low because we haven't seen a close above. So let's just go forward. And let's go again. And we close up. So you see we now closed up above that candle's high. That becomes a valid low. Are we going to hold this area? Well, first, let's understand what's happening. Price is pulling back. We just closed through this imbalance. We need to see this supply imbalance hold. So let's look at what the candle does next. Let's go forward with a candle. We have held. We've just wicked down. Could push price back up to take the high again. Let's just see what's going to happen. And we've dropped off. Let's just see if we do run lower quickly. So we're running down towards that low. We've just wicked through the low. So yeah, okay, it held at that imbalanced candle and we've pushed back down. Let's see if we can break it. And we've held at it. We haven't closed through. Let's see if we can break it this time. We're still holding. So we do nothing, okay? We can't do anything until we actually see that break of structure. And we still haven't broken through. See the next candle and a big push back up. So this is only holding here. We've just swept again this low and pushing bullish. That means we could see a shift back bullish. Let's go forward a few candles. And eventually we do close down. So as soon as we see that close down, we look back for our new high. Well, this candle closes above this candle. That means this becomes our new high. And now we just look for the new valid low. Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description to secure your priority pass and start mastering smart money structure today. You see when this candle just closes above, that became a valid low. Okay, and now we've broken back down bearish. So now price just held at this area. Now we've got a new move down. We're looking for again a valid low. And again, as soon as we saw this candle closing up, we can mark our valid low on this 1 minute time frame, looking for this imbalanced candle hold to continue with the range. And we reversed. So you can see that we made a higher low. We actually held at this bullish candle. Now we've closed through and we've broken. This candle closes down. That means this becomes my valid low. As soon as you see this candle closing down, this becomes my valid high. Now it's a quick pullback and a bullish break again. Now all that's happened is price is held in this candle. So let's go forward another candle and we get a strong push away. So we're looking for a close down. So this candle just closes down below that candle. That means this becomes a valid high. This is a break of structure and this is our valid low. So our new trading range is this move here. You see how we continue to push up, looking for a pullback into these candles, into demand, potentially run higher. See what happens, and we close back up on that candle. So we just held at that bullish imbalance. New break of structure. We look back, the last time we closed down is still this candle. This becomes our valid low. We don't yet have another close down. Let's just see what happens next few candles. We continue to push up. So let's wait. And we do close down right there on that bearish candle. So now we mark off this high. And that is the sequence, all we're doing. You continue to understand where your current trading range is. We're bullish there. You look for continuation higher from this point because looking for a pullback into our demand zone. You can see the price held and we broke out and went higher again. Very simple. And again, just using supply and demand with structure will show you how to take those trades. But if you want to understand the break of structure in more detail, I do suggest checking this video coming up right here. It's going to help you to understand that break of structure, what's valid and what's not.